All right, so today let's dive into something pretty fascinating.
Okay.
Quantum Sci Incorporated. They're doing some really cutting-edge work in the world of proteomics,
Right.
using semiconductor tech to analyze proteins. So we're talking
Yeah.
potential breakthroughs in disease research,
Yeah.
drug development, the whole 9 yards.
Absolutely.
You reached out to us because you're interested in QSI's financial health and their future prospects,
Yes.
especially with their earnings report coming up on March 6th.
Right.
And you've given us a really great stack of sources to unpack.
Yes, I'm excited to dig in.
Yeah, me too. So,
Well, just to kind of give everyone a quick overview,
yeah,
Quantum Sci, or QSI as they're listed,
right.
they are really trying to change the game in how we study proteins.
Okay,
Their platform focuses on speed and efficiency,
got it.
which is absolutely crucial in scientific research.
Makes sense. Now, analysts are predicting a dip in earnings,
Yeah.
a negative $0.18 EPS, which is a 12.5% decrease year over year.
Mm-hmm.
But here's the thing. They actually exceeded expectations last quarter
They did.
with a negative $0.16 EPS against a projected negative $1.21.
Right. So that beat might make it seem like things are going well.
Yeah.
But if we zoom out a little bit and look at the bigger picture,
Okay.
the overall trend is downward.
Interesting.
QSI is up against some pretty significant challenges.
Like what are some of the things that they're facing?
One of the biggest things is their operating losses have been pretty substantial.
Yeah, their recent quarterly report showed a net loss of $27.8 million.
Yes, that's a lot of money.
Yeah, that's a hefty sum.
It is. But these kinds of losses aren't totally unusual for companies that are really pushing the boundaries in research and development.
Right.
There's always a trade-off.
Okay.
You have to invest heavily to innovate,
Mm-hmm.
but those expenditures can really impact the bottom line,
Yeah, especially in those early stages.
especially in the early stages. But luckily for QSI, they do have a pretty substantial safety net.
You're talking about their strong liquidity position.
That's exactly.
Yeah.
They're sitting on about $196.3 million in cash and equivalents.
Wow. So that financial cushion
Yeah.
provides a critical lifeline for them.
It really does. It means they can continue funding operations.
Okay.
They can keep innovating and weather these losses without jeopardizing their future entirely.
That's huge.
And that kind of stability also tends to attract investors.
That makes a lot of sense. And it seems like they're being strategic about their investments, too.
Yes.
I'm seeing here they have some new products in development, like library preparation and barcoding kits.
Yes. Those kits are designed to streamline and enhance the process of preparing protein samples for analysis on their platform.
Okay.
It's a smart move, especially since it's a different revenue stream than their core platform.
That's really interesting. It's like they're diversifying their offerings within the proteomics field itself.
Exactly.
But even with those positive moves, we can't ignore those operational risks we were discussing earlier.
Absolutely.
Yeah.
And those risks are reflected in some pretty alarming figures. Their EBIT and pre-tax profit margins are currently at negative 724.7% and negative 763.3%,
Whoa.
respectively.
Those numbers sound intense. Can you break those down for me and for anyone listening who might not be a financial expert?
Sure.
What does that actually mean for QSI's day-to-day operations?
Well, those negative margins really just paint a picture of a company where costs are exceeding revenues
Okay.
by a significant amount.
Got it.
It's like they're spending a substantial amount of money for every dollar they're bringing in.
And while some of this is due to their R&D spending, which is to be expected,
Right.
some of it is related to other factors as well.
Yes, some of it is.
Are you referring to those reported struggles that they've had with their AI software development and revenue falling short of projections?
Yes, those are definitely part of the equation.
Okay.
And all of this is occurring against a backdrop of a fiercely competitive market.
Yeah.
It's not just about innovating.
Right.
It's about innovating faster and better than everyone else.
So they have to stay ahead of the curve.
They do. If they want to stay in the game, QSI has to constantly push boundaries,
Okay.
which inevitably drives up costs.
So it's like they're caught in this whirlwind of needing to innovate quickly, but that very innovation is putting a strain on their finances.
Exactly.
And to top it all off,
Yeah.
they're facing stiff competition
Yes.
from much larger, more established companies in the life sciences and genomics arena.
You've hit the nail on the head. They're going up against companies with deeper pockets,
Right.
more resources, and a larger market share.
It's a tough uphill battle.
It is. It's a tough uphill battle, no doubt about it.
But despite the challenges, it's not all doom and gloom.
It's not.
QSI does have some things working in their favor,
Yeah.
especially that cash reserve.
Right.
And it seems like they're also trying to be proactive by diversifying with those new kits
Okay.
and working to manage their cash flow effectively.
Yes.
I'm curious to learn more about these strategies for survival.
Okay.
What specific steps are they taking?
Let's dig into that. They're not just hoping for the best. They're actively trying to change their approach.
Okay.
And one of their key strategies is to diversify their revenue streams even further.
Okay, so they're not putting all their eggs in one basket.
Exactly.
Makes sense to me. But how exactly are they diversifying?
Well,
Are we talking about branching out into totally different areas or doubling down on their existing strengths in proteomics?
that's a great question, and that's exactly what we'll delve into next.
All right, sounds good.
Okay. Well, it seems like they're doing a bit of both,
Yeah.
expanding within proteomics,
Mm-hmm.
but also exploring some adjacent areas.
Got it.
For example, they're looking into applications of their technology in areas like agricultural research
Interesting.
and food safety.
So leveraging their core technology, but finding new and innovative ways to apply it.
Exactly.
That's really clever.
It makes them less vulnerable to fluctuations in any one particular market.
Right, like spreading the risk.
Yeah, precisely. And they're also taking steps to streamline their cash flow management.
Making those dollies stretch further,
Yes, especially when you're a company dealing with significant operating losses.
for sure. What exactly does that kind of streamlining involve?
Well, it's about optimizing every aspect of their financial processes.
Okay.
So, for example, they're implementing systems to expedite the collection of payments from customers.
Makes sense. Speed things up a bit.
Right. And they're also working on negotiating more favorable terms with suppliers.
Getting those costs down wherever possible.
Exactly.
It sounds like a lot of behind-the-scenes work,
It is.
but absolutely essential.
Yeah, it's like tightening up all the financial nuts and bolts.
Exactly. And another key area they're focusing on is strengthening their internal controls.
Yes.
Now, I know internal controls might not sound as exciting as cutting-edge proteomics,
Right.
but I get why it's important. It's about preventing errors and, well, making sure everything is above board, right?
Absolutely.
Yeah.
Think of it as building a solid financial foundation for the company.
Oh, okay.
So they're implementing stricter approval processes for expenditures, making sure regular audits are conducted.
Uh-huh.
And they're placing a really high priority on detailed and transparent financial reporting.
So no room for surprises.
Exactly.
Or let's just say creative accounting.
Right. But it's not just about being reactive. They're also taking a proactive approach
Okay.
by engaging in extensive scenario planning.
So like playing out different what-if scenarios to see how the company would hold up
Exactly.
under various conditions.
Precisely. They're analyzing a range of possibilities,
Okay.
from best case to worst case scenarios,
Got it.
to identify potential vulnerabilities and develop strategies to navigate unexpected challenges.
That makes a lot of sense, especially in an industry as dynamic and unpredictable as biotech.
It does.
It's like having a financial playbook for whatever curveballs might come their way.
Exactly. And another important piece of this is their commitment to quality assurance.
Okay, so making sure that their products are top-notch.
Yes, minimizing the risk of costly errors or defects.
Because a faulty product can lead to recalls and lawsuits and a whole host of problems. Not to mention damage to their reputation.
Exactly.
Mm-hmm.
By prioritizing quality throughout the entire production process, they're aiming to reduce the likelihood of those issues down the line.
Fewer headaches, happier customers, and ultimately a healthier bottom line.
Absolutely.
It's a win-win.
It is. And they're also taking steps to build up their contingency reserves.
A rainy day fund for the company.
Exactly. They're setting aside funds specifically to handle unexpected downturns
Okay.
or challenges that might arise.
It's like having a financial safety net.
Precisely.
It must provide some peace of mind knowing they have that buffer in case things get really rough.
It does. And last but not least, they're embracing the power of financial technology.
So using the latest tools and software to gain a real-time understanding of their financial position,
Yes.
I can see how that would be incredibly valuable in such a fast-paced environment.
It is. They're leveraging real-time data integration and analytics to get a clearer picture of their financial performance.
So it's like having a high-tech control panel for their finances.
That's a great analogy.
Allows them to spot trends, identify potential risks, and adjust course as needed much faster than traditional methods would allow.
They can see the currents shifting in real time
Yeah.
and respond accordingly.
So while QSI is clearly facing some very real challenges, It seems like they're not just sitting back and waiting for a miracle.
No, they're not.
They're actively trying to take control of their destiny.
They are. They're demonstrating a willingness to adapt,
Mhm.
to learn from their mistakes, and to make those tough but necessary decisions.
It's a classic story of resilience and reinvention.
It is.
And it speaks to those inherent challenges of operating in a field as cutting edge as proteomics.
Right.
It's not just about the science, it's about navigating that complex world of business and finance and competition.
And it's a reminder that innovation often comes at a cost.
Yeah.
But if QSI can successfully implement these strategies, those investments might just pay off in a big way.
It sounds like they're trying to strike that delicate balance between ambition and pragmatism, pushing the boundaries of scientific discovery,
Right.
but also keeping a watchful eye on their bottom line.
You've summed it up perfectly. It's a tightrope walk, for sure,
It is.
but it's also an incredibly exciting journey to watch unfold.
So where do you think QSI goes from here?
That's a good question.
What are your thoughts on their future prospects?
Well, one avenue they could explore more aggressively is strategic partnerships.
Okay, so collaborating with larger, more established players in the industry.
Exactly. They could give them access to resources,
Mm-hmm.
distribution channels,
Okay.
a wider customer base.
It's like leveraging the strengths of others to bolster their own position,
Right.
and it could potentially reduce some of that pressure to do everything in-house.
Exactly. And those partnerships don't have to be limited to just big pharma or biotech companies.
Oh, okay.
They could also look at collaborations with academic research institutions or
Yes.
even government agencies.
So tapping into a diverse range of potential partners
Yes.
to really expand their reach and their impact. It seems like QSI is already kind of dabbling in this.
They are.
With those new library preparation and barcoding kits you mentioned earlier?
Yes, those kits are a prime example of how they can diversify their offerings within that proteomics space.
Okay.
They're essentially providing tools that complement their core platform.
So it's not just about selling the platform itself, it's about creating this whole ecosystem
Right.
of products and services that support and enhance its use.
Precisely. And that approach can create multiple revenue streams,
Yeah.
which, as we've discussed, is crucial for a company in QSI's position.
Absolutely. It's like building a multi-layered safety net for their business.
Mhm.
And speaking of safety nets,
Yeah.
I'm curious to circle back to QSI's financial situation.
Yeah.
We've talked about their losses and the challenges they face.
Right.
But they also have that substantial cash reserve.
They do.
How long can that realistically sustain them?
That's the million-dollar question, isn't it?
It's hard to say for sure.
It's difficult to say with certainty how long their cash runway is.
Right, because that depends on a number of factors.
does.
Including their burn rate, their ability to generate revenue, and their success in implementing those cost-saving measures that we were talking about earlier.
Right. So it's a bit of a moving target.
It is. But is there anything in the financial data that gives us a sense of their current trajectory?
Well, based on their most recent filings
Okay.
and current analyst projections,
Mm-hmm.
they likely have enough cash on hand to fund operations for at least the next 12 to 18 months,
Okay.
possibly longer,
Got it.
if they can successfully reduce their burn rate.
So that gives them some breathing room,
It does.
but it's certainly not an indefinite cushion.
No, it's not.
It really highlights the urgency of those strategies they're putting in place
Yes.
to become more financially sustainable.
They can't afford to be complacent,
Right.
even with that relatively healthy cash reserve.
They got to keep moving.
They do. They need to keep a close eye on their spending,
Mm-hmm.
continue to explore new avenues for revenue growth,
Right.
and make those tough decisions when necessary.
It's a high-stakes game, that's for sure.
It is.
And it's really fascinating to see how they're navigating it.
It is. It's a reminder that even in the world of cutting-edge science,
Yeah.
business acumen and financial savvy are absolutely essential for success.
I couldn't agree more. QSI's story is a perfect illustration of that intricate dance
Yeah.
between innovation,
Mhm.
financial management,
Uh-huh.
and market dynamics.
It highlights the challenges and the opportunities that come with pushing the boundaries of scientific discovery.
Well said. It's been a truly insightful deep dive into the world of Quantum Sci Incorporated.
It is.
We've explored their groundbreaking technology, their financial hurdles, and the strategic steps they're taking
Right.
to chart a path towards long-term success. It'll be interesting to follow their journey and see how it all unfolds.
It will. They're a company to watch, for sure.
Yeah.
And for you listening, I'll leave you with this final thought.
Okay.
Given the competitive intensity of this field,
Mm-hmm.
and QSI's need to rapidly innovate, what kind of breakthrough would truly move the needle for their earnings in the long term?
That is the question.
What game changer would really catapult them to the front of the pack?
Right.
It's something to ponder
It is.
as we continue to observe QSI's evolution.
That's a great question to leave our listeners with. Well, thanks for joining me on this deep dive.
Thank you for having me.
It's been an eye-opening exploration of a company at the forefront of both scientific and financial frontiers. Until next time.